This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
OPEC Plus member states lined up on Sunday to endorse the steep cut to its output target agreed this month after the White House, stepping up a war of words with Saudi Arabia, accused Riyadh of coercing some other nations into supporting the move. The United States last week said the cut would boost Russia's foreign earnings and suggested it had been engineered for political reasons by Saudi Arabia, which on Sunday denied it was supporting Moscow in its invasion of Ukraine. Saudi King Salman bin Abdulaziz said the kingdom was working hard to support stability and balance in oil markets, including establishing and maintaining agreement of the OPEC Plus alliance.
Oil prices held steady on Monday in choppy trading as China's continuation of loose monetary policy offset fears that high inflation and energy costs could drag the global economy into recession. Brent crude futures were down 2 cents, or 0.02%, to $91.67 a barrel by 11:37 a.m. Eastern Daylight Saving Time, 15:37 GMT, recovering from a 6.4% fall last week. U.S. West Texas Intermediate crude was up 4 cents, or 0.4%, at $85.57 after a 7.6% decline last week. U.S. inflation remains a front topic, and with the Fed set to raise rates at least into next year, there are fears that demand destruction will escalate, said Dennis Kissler, Senior Vice President of Trading at BOK Financial.
Moving on to the top news in the energy sector.
The European Commission is set to propose this week a last resort dynamic price cap for natural gas in the European Union and mandatory limits on the degree to which traded prices can fluctuate in a single day, according to a draft proposal. The EU is seeking to wean itself off Russian fossil fuels, but Moscow has in past months largely cut the block off from its gas pipelines, spiking prices and leading to supply concerns. Under the proposal seen by Reuters, which will need to be agreed by EU governments, the European Agency for Cooperation of Energy Regulators, ACER, would be charged with producing a price benchmark by March 23 for liquefied natural gas, of which the EU is buying more.
The time for talking is over, French Finance Minister Bruno Le Maire said on Monday, as the government ordered more fuel depot staff back to work to try to restore petrol supplies that have been disrupted by strikes for weeks. The government said it had requisitioned 6 workers at a Total Energies depot in Dunkirk, northern France, and would do the same at its Faison depot in the southeast this afternoon. The oil company and unions representing a majority of its workers reached a pay deal including a 7% increase in a bonus on Friday, but the company failed to end its dispute with the hardline CGT union, which is demanding a 10% pay rise, citing inflation and huge profits made by the firm. Next, we have the top news in metal markets. Aluminium prices dropped on Monday as inventories in London Metal Exchange, LME, warehouses jumped, fueling fears of unwanted Russian origin metal in the LME system, traders said. Benchmark aluminium on the LME was down 2.3% at $2,252 a ton at 10:37 GMT. Western countries have imposed sanctions on Russian banks and wealthy individuals connected to President Vladimir Putin since Russia's invasion of Ukraine in February, but so far there are no restrictions on buying Russian metal.
Iron ore futures and most ferrous metals in top steel producer China fell on Monday, extending losses a day after President Xi Jinping reiterated the effectiveness of his zero-COVID policy at the opening of the ruling Communist Party Congress. Xi confirmed what the party's official newspaper stressed 3 times last week, that the policy was correct, as he said China achieved major positive results in the overall prevention and control of the epidemic. Although somehow anticipated, his remarks still weighed on sentiment as some traders were still clinging to hope recently for looser COVID-19 rules.
We will now look at the top news in the agricultural sector.
India has sufficient stocks of rice and wheat, and the government will sell wheat in the open market if needed to control prices, the most senior civil servant at the Ministry of Consumer Affairs, Food and Public Distribution, said on Monday. We've enough stocks of rice and wheat and there's nothing to worry, Sudhanshu Pandey told a press conference. We'll intervene if needed, he said, replying to a query on whether the government would sell food stocks in the open market to keep a lid on local prices.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.